Less than 3.5 minutes before the closing bell rings, we've got the NASDAQ and the S&P on pace for records once again. And if we can, we should look at Alphabet shares. Alphabet earlier topped $3 trillion in market cap. It needs to close at $252, like $252. Right now, it's just below it, $251 to close as a $3 trillion market cap company. So we'll watch that for you. In the meantime, we're watching consumer discretionary. The Select Spider Fund, which is chock full of want to buy versus have to buy stocks, is hitting a record at this hour. Our investors betting that by cutting interest rates, if they do on Wednesday, the Fed is going to put more money into the economy and by extension, consumers' pockets. Ahead of the Fed kicking off its two-day meeting tomorrow, Key Advisors Wealth Management co-founder and CEO Eddie Ghabour says his winning bet will be consumer discretionary. Is it all hinging on the Fed cutting rates?
It is. That in conjunction with the fact that it's very rare that you have a Fed cutting rates when markets are already at all-time highs in a non-recessionary environment. And so the fact that they're going to be increasing liquidity because they're late to cutting is going to really cause an acceleration on growth economically, in our opinion, and names in the discretionary like Amazon and Tesla should be big, big winners in this type of environment. So we're heading a different economic regime. We're rotating out of some big winners and going into where we think the market's going to be headed here in the next 6 months.
Okay, and as we look at the Select Spider XLY for consumer discretionary, again, it is hitting a record high just at a time where we are seeing wiggly job numbers. Does that concern you at all?
It does not. As a matter of fact, these weak job numbers are exactly what the bulls need, because if it wasn't for the weak job numbers, the Fed would not be pivoting right now because we're not close to their inflationary target. So it is a Goldilocks scenario. Weakness is much different than a recession. And so many people are still worried about a recession. We don't think there's any chance for a recession next 6 to 12 months. And this is why you want to be in these names. They have much higher to go, in our opinion.
Everybody says financials do well when rates go up because they can charge more for their loans, but you're picking JP Morgan as well.
Yes, you know, the one big thing that's happening here because of this regime change is you're seeing a broadening out. And JP Morgan is best of breed. I like to bet on the CEOs that I think are the best. Jamie Dimon is one of the best, and I think they're going to really do well in this environment because you're going to start to see more M&A activity, and you'll also see more companies needing funding for further growth, especially small businesses.
Eddie, I'll tell you, you get to witness a twin win. The S&P and the NASDAQ at records. How long does this continue? 10 seconds.
12 more months. We are going to go much higher than where we are. We think there's 20% plus more upside here in this broad market.
Terrific to see you. Thanks so much.
Thank you for having me.